Ever wondered what happens when the world's richest man takes on the world's biggest banks and wins? Imagine a game of poker where one player holds all the cards, but everyone else thinks they've won. That's what Elon Musk did to the banks with his Twitter takeover. In 2022, Elon Musk orchestrated one of the most audacious deals in modern finance, the $44 billion takeover of Twitter. But this wasn't just a simple acquisition. It was a high-stakes gamble that left some of the world's largest banks in a precarious position. This is the story of how Musk turned the tables on Wall Street and left the banks holding a toxic debt that's still haunting them today. Elon Musk was a major presence on Twitter, from hyping up Dogecoin to sharing all sorts of memes. Musk saw Twitter as more than just a social media platform. It was a digital public square with immense influence over global discourse. Musk believed that Twitter had untapped potential to promote free speech, transparency, and innovation. He was vocal about his concerns regarding censorship and wanted to transform Twitter into a platform that aligned with his ideals of open dialogue and decentralized control. In April 2022, Musk made a bold move. He announced his intention to buy Twitter outright, but almost as soon as the offer was made, he hesitated, citing concerns over fake accounts and bots, a signal that Twitter's transparency wasn't what it seemed. After a tense back and forth, Musk decided to move forward with the acquisition, setting the stage for one of the most daring deals in financial history. But there was a major hurdle. How would he come up with the money to make the purchase? Although he was the wealthiest person in the world, Musk didn't have the cash on hand. Most of his wealth was tied up in shares of his companies like Tesla and SpaceX. This meant he couldn't just write a check. He had to find another way to finance the $44 billion deal. He liquidated $20 billion by selling off Tesla shares and other assets. But that still left him short. To close the gap, he needed $24 billion more and fast. His only shot was to convince other investors or banks to finance the deal, and so he did. Given his track record on leading and scaling profitable companies, he managed to receive $7 billion from 19 different investors, and also a $4 billion personal loan, using his Tesla shares as backup. The real challenge was to convince the banks to join the deal and lend $13 billion having Twitter assets as security. The risk involved was huge for the banks, as the stakes were high. Twitter's uncertain profitability and future made the deal even riskier. Furthermore, by committing a large portion of their funds to this deal, the banks faced a liquidity issue, potentially missing out on other future opportunities. But with all risk involved, the banks accepted the deal surprisingly quickly. Do you wonder why? Greed is the answer. The banks had a straightforward plan. They would lend money to Elon Musk for his purchase, and then sell the debt as soon as possible to other investors for a profit. Let's take a quick example to better understand the concept. Imagine a bank that offers mortgages for houses with the intention of packaging these mortgages into securities and selling them to investors for a profit. This technique is frequently used by the banks in the whole world, but as experienced in 2008, there is a catch. If the housing market crashes and property values plummet, the bank can't sell these securities at a profit anymore, and might even struggle to break even. That's exactly what the banks encountered when they decided to lend money to Elon Musk. With all the risks involved, the banks thought this strategy would allow them to make a small profit and shift the risk off their books by only being intermediaries in the whole process. Elon Musk's successful track record and the appealing chance to make a profit were too tempting for them to pass up. So, a group of 7 banks, including big names like Bank of America and Morgan Stanley, lent him $13 billion backed by Twitter's assets. With the ink barely dry on the contracts, Musk took control of Twitter. But almost immediately, the platform began to falter. Mass layoffs, policy changes, and erratic leadership led to a plunge in its perceived value. Musk's unorthodox management style drove away advertisers, the platform's primary source of revenue, showing a rebuild of the income streams and business model of the platform. Twitter's value dropped from $44 billion to $19 billion. The banks quickly found themselves in deep trouble. the debt they intended to flip at a profit suddenly became a deadweight. With Twitter hemorrhaging value, no investors were willing to buy the debt without demanding a steep discount, one that would leave the banks facing massive losses. The liquidity they counted on evaporated overnight. Eventually, the banks realized that Elon Musk's primary interest in acquiring Twitter was to promote free speech, rather than focusing on the financial profitability of the platform. This understanding came too late, as they had already committed financially based on the assumption that the investment would yield substantial returns. Caught in a financial vice, the banks faced a grim reality. Not only were they stuck with a toxic $13 billion debt, but they also had their balance sheets choked with liabilities, preventing them from funding more profitable ventures. And then came the internal fallout. Investment bankers, accustomed to fat bonuses, were told to brace for pay cuts of up to 40% as the banks struggled to absorb the blow. For these financial giants, the Twitter deal has become one of the most disastrous merger finance arrangements since the 2008 crash. What was supposed to be a straightforward, profit-driven transaction turned into a ticking time bomb. A vivid reminder that even the world's top banks aren't immune to the consequences of overreaching. Elon Musk's acquisition of Twitter has reshaped not just the platform but the financial world itself. The banks, lured by greed, now grapple with a self-inflicted wound. Meanwhile, Musk is left with a platform that is still far from the transformative vision he promised. Now, what do you think? Will Musk manage to turn Twitter around and reclaim its former glory? Or will the banks continue to bleed from a deal gone horribly wrong? Let us know your thoughts in the comments below. And as always, make sure to like, share, and subscribe for more deep dives into the world of high finance and corporate power.